It's almost 1 p.m. in Sydney, 11 a.m. in Hong Kong. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Asian shares on the rise to kick off a week that brings rate decisions from the US and Japanese central banks. More big tech earnings on the way too, with the Nasdaq 100 on the brink of correction. Venezuela awaits the first results from a tense election that could threaten President Nicolas Maduro's grip on power. We're live in Caracas this hour. Plus, Pakistan set to make its rate decision today, with economists expecting a cut to reduce a drag on growth. All right, let's check in on how markets are doing today. Avril Hong's in Singapore. Avril.
Climbing after 3 sessions of declines, and note here that we're seeing volumes a bit lower than are typical this time in the trading day, but also of course it's a big week, a 32-hour central bank bonanza up ahead. Will we see a rate hike along with QT from the BOJ? How dovish is the Federal Reserve going to sound in terms of outlook? And we also have some of these big economic indicators out this week, the China PMIs and then the non-farm payrolls at the end of the week. Not forgetting those tech earnings, not just out from the US. Samsung also reporting this week. So I think the importance of this week for markets in the region is something that cannot be overstated, Paul.
All right, thanks very much, Avril. And do stick around. We're going to be talking about what's at stake for the near-term path of global monetary policy. So we're joined now by Selena Ling, Chief Economist and Head of Global Markets Research and Strategy at OCBC. Avril's also going to be joining in with us for this conversation. Selena, I just want to start off with the big bank decisions that we've got this week. We've got the Bank of Japan, the Fed, the Bank of England, all within a 36-hour period. So I just want to start, if I can, by getting your thoughts on the Bank of Japan. There's pretty broad agreement. This is a live meeting. Less agreement on whether or not the BOJ will actually move. Now, we heard a bit earlier from Takahide Kiuchi. He's a former board member with the BOJ. Here's what he had to say.
The market view is divided, but I myself expect that the BOJ will not increase the interest rate. It's risky for the BOJ to implement two large policy change at the same time. That could destabilize the financial market.
So a former BOJ board member there saying too risky to move this time. What are your thoughts? What are the cases here for and against a rate rise from the BOJ?
Well, our view is actually for a 10 basis point rate hike by the BOJ. I think if it doesn't move, it's going to risk disappointing the market. Last week, we did see the yen stabilize quite a fair bit against the dollar. I think in anticipation that they will announce not just, cutting back the JGB purchases from around 6 trillion to around 4 trillion, but hopefully that they will also implement a rate hike. I think the inflation numbers have been coming in quite encouraging, and the risk, of course, is that the yield differentials still very much favor the dollar for now. So I do think that they have a lot of room to play catch up to the US, and even if they hold off a rate hike this time round, market's still going to be looking for them to do more in the months to come. So it's very much a normalization game for the BOJ at this juncture. So far, the wage negotiation seems to be coming in on track, and I do think that they should gain greater confidence to normalize policy going ahead.
Okay, so if the BOJ doesn't move this week, how long can they potentially wait before they do tighten? What are the risks here of not going soon?
I think the pressure really is on them to get a move on. The baby steps that we have seen so far is kind of disappointing the markets, which is why we have seen dollar yen climb much higher until the reprieve that we saw last week. And that was largely, I think, due to the broad dollar, mainly because the Fed is signaling that they may move sometime soon. So I think it's not just a question of what the BOJ will do, but also what the Fed will do. And while we are expecting the Fed not to do anything this week, but nevertheless, I think they will suggest that the rate cuts is coming soon. Markets has fully priced in the September cut. But I think on one hand, while they want to signal that the rate cut is coming imminently, I think the Fed also doesn't want to, basically commit itself to a preset rate cut trajectory. So it has to walk a very, very fine balance as well, to signal that they will cut, but it's still very much data dependent, and they are still looking for basically the inflation numbers not to surprise on the upside in the near term.
Okay, just on Japanese assets, the yen rally, how much further room do you think there is, given how there's still a sizable amount of shorts in the markets? And what are the support levels you're looking on JGBs, on the 10 years?
Well, we are still looking for the JGB 10-year to trade around 1.15 to 1.25 kind of level. Essentially not really expecting the BOJ to surprise too much on the aggressive side. If you look at the likely paring back of the JGB purchases, we're looking from 6 trillion yen to 4 trillion yen. On an annualized basis, that's probably about 22 trillion yen. That's still fairly small compared to the size of their balance sheet. They still own about 700 over trillion yen. So it's very much a slow and steady type of progress. They are not, overtaking, in terms of the Fed or the BOE in terms of QT at any point.
Okay, when we look at September, as is your base case for the Fed, what are you seeing in the US labor market, and how big are the risks that the Fed is moving too slowly?
Well, we've been waiting for the Fed first rate cut for like a good 6 to 9 months already. So even if they cut in September, it's not so much about the first cut. It's really what follows after that, because you have the US elections coming up in November. Trump has already said he doesn't want the Fed to cut rates because that's going to presumably favor, Kamala Harris at this joint. And I think going forward, because of some of the campaign promises by Trump, which could potentially be inflationary, clamping down on immigration, renewing the tax cuts, and also doing other stuff, these potentially could kind of like throw a stumbling block to the Fed's intention to cut rates in 2025 as well. So I think there's a fair range of uncertainty that will be attached beyond the 1 or 2 cuts that we'll see this year.
Okay, how much steeper in the curve do you think we will see between now and the end of the year?
Well, the US Treasury yield curve, 2/10s, actually has narrowed quite a fair bit. It's about, 11 or so basis points away from normalization. If the Fed cuts 25 in September and hopefully another 25 by end of the year, it is possible that we will see some normalization in the first half of next year. But like I mentioned, because of the big risk event in November, because of the elections, I think it's very much data dependent. I think they will be a little bit wary about pre-committing to a set path at this point in time, because the policies could very well change depending on who is the new president.
Yes, Selena, timing's interesting here as well, because of course the Fed is apolitical and likes to make that very, very clear, but you can't escape the fact that there is an election in November, and one side in particular is likely to try to politicize whatever the Fed does. So would that be in the back of the Fed board's mind in terms of timing? Is there a temptation here to leave it until after November?
I suspect not. If they look at the recent incoming data, it does suggest that inflation is coming off, although the last month was a little bit bumpy. Labor market and also on the consumption side, it does point to basically the US consumers running down a little bit on the savings front. So I think the pressure is actually for them to probably get in 1 or 2 cuts before the story may change going out into 2025 with a new president. So as much as they would like to stay apolitical, the end of the day, some of the rhetoric coming out from one of the candidates suggests that it will be very, very hard to do so.
What about dollar between now and when we see the actual results of the US election? Is it dollar positive, dollar negative that year?
Dollar will probably trade in a wide range for now, because I think the September rate cut has been priced in. I think what is really uncertain is basically how much of a chance Kamala Harris, and she seems to be getting quite good traction in the first week of running as a candidate. So I think going out into the Democratic convention, if the momentum continues to favor her, and the polls are suggesting she's probably about 1-2% ahead now, that would actually mean policy continuity. Policy continuity means then the focus will shift really back squarely to the Fed. And the Fed's tone, if they continue to maintain that they are willing to implement at least a few rate cuts in the coming months, I think that should keep the dollar basically slightly under pressure.
And what will be the fate of the yen as well? How much strengthening do you see here? Because this divergence scenario is getting more and more real with every passing month.
Yeah, so I think when it comes to the yen, it's pretty much similar, I think, to the PBOC. Basically, these are the two currencies that have very wide yield differentials against the dollar. So yes, the BOJ is trying to normalize policy, but given that it's fairly small baby steps at the moment, unless it surprises aggressively on the hawkish side, I think the pressure would still, be on the yen. I would see this as a short-term reprieve. I really don't think it's a big change in terms of the overall direction at this point in time.
What about some of the risks for other Asia central banks in terms of growth? I mean, last week we saw how South Korea's GDP reversed. The next move could be one of easing. Is this something that you're seeing as a bit more synchronized across the board, the rest of the region, apart from Japan and China?
Well, across Asia, I think most of the central banks have been waiting for the Fed to open the door to rate cuts, and then can follow suit as well. So actually, it's interesting you mentioned South Korea, because looking at the growth numbers coming out from the North Asian countries apart from China and also from Singapore, second quarter growth has actually been surprising on the upside. And what this means is that some of that tech recovery story is coming on stream. The exporters are benefiting from the AI boom. And I think that actually puts them in a very good place as far as growth is concerned. But if there is a window to actually ease monetary policy in the wake of the Fed's expected cut in September, I think a lot of central banks would like to follow suit, because there has been a lot of pressure on the Asian ex-Japan currencies in the recent months as well.
Does that include Singapore?
I think for Singapore's case, they're very much pretty on hold at the moment. The fact is that they kept the core inflation forecast unchanged at 2.5 to 3.5%. But given that they have hints that core inflation will ease to around 2% next year, I think definitely the window is open. So I wouldn't write off October just yet, even though our base case is that they may only move in 2025.
How much further strength then do you think you see in the Sing dollar amid all this? Because even if they do ease in October, it's not likely to be something that's terribly aggressive. So are we going to still see the Sing dollar doing well for another year against its other APEC peers?
I think the MAS stance is clearly one where they are still very cautious on imported inflation, especially given that core inflation will only step off more significantly from the fourth quarter. So if you look at the post-MAS announcement on Friday, the trade-weighted Sing dollar continues to trade around 1.8, 1.9% on the stronger side of the band. It's still likely to inhabit the higher side of the band. But if, let's say, they do contemplate a slope reduction, for instance, you're still looking at appreciation, but maybe at a 1.5% per annum pace instead of a 2% per annum pace. So you are right in the sense that it's still going to be very much be in favor of the Sing dollar.
All right. We'll see how it pans out the rest of the year. Selina, great to have you with us.
Thank you.
Thanks so much for sharing your insights. Selina Ling of OCBC. Back to you for now, Paul.
All right, still to come on Bloomberg Markets Asia. Angel One Wealth is going to share their outlook on Indian markets. Hear why they're favouring large caps and not ruling out a possible correction. That conversation coming up. This is Bloomberg. We are keeping an eye out for election results from Venezuela. President Nicolas Maduro has squared off against former diplomat Edmundo Gonzalez, who's a stand-in candidate for former lawmaker Maria Corina Machado. For more, let's bring in our Latin America executive editor Creighton Harrison in Caracas. Creighton, do we have any sense of either side claiming victory at the moment? And can you give us a sense of what's at stake in this election?
Well, both sides are being very careful not to declare victory ahead of the official results as sort of a legal thing here in Venezuela. But they're both sort of winking and hinting, and the ruling party has been holding a big celebration outside of the presidential palace, which gives you an indication of how they think the night is going anyway.
And are we able to say if this has been a clean election or not? Have there been any allegations of vote tampering?
Well, there have been a few incidents here and there of people not getting access to voter rolls, to voter tabulations as part of the counting process, which is supposed to be the way it works under Venezuelan law. But by and large, the opposition party has not made any sort of broad allegations of fraud at this point. there is still a long way to go tonight. And depending on what the result that's announced from the electoral agency, which is controlled by the ruling party, we could see a different outcome later in the evening.
So depending on the outcome, a Maduro win or a Gonzalez win, what does the future look like for Venezuela, particularly in terms of economic policy?
Well, those are two very different forks in the road. Gonzalez represents an opposition that is more center-right, let's say, more interested in liberalizing the economy, perhaps even bringing private investment into the oil sector in a bigger way than the Maduro administration has done over the last 11 years. The Maduro administration is really looking for some air of legitimacy out of this election to be welcomed back into the international community. And so if it does win, it has to show that at least won with some semblance of fairness, which is going to be the real challenge the longer this night goes on.
So in terms of the opposition candidate, it is Edmundo Gonzalez's name on the ballot, but right behind him there is Maria Corina Machado. Can you tell our viewers what her role is in all of this? And should Gonzalez be successful, what would her role be in a new administration?
Yeah, absolutely. Machado has been the real driving force behind what's been a surprising surge by the opposition, a real show of support among voters. She was originally going to be a candidate and won the primary handily earlier this year, but she was banned from running because the administration alleged that she had been involved in betraying the country in some way or another. So she was not allowed to run. A replacement that she named was not able to run, and now Edmundo Gonzalez is the third string backup, but she has been campaigning across the country alongside him, supporting him as the presidential candidate. They haven't said exactly what role she would play if he does win, just that she would be involved in some form.
All right, Latin America Executive Editor Creighton Harrison there, and we're anticipating results from the Venezuela election possibly at the top of this hour. All right, let's get to the Middle East now. Israel is threatening further military action after striking Hezbollah targets in Lebanon in response to a rocket attack that killed a dozen young people in the Israeli-occupied Golan Heights. Prime Minister Benjamin Netanyahu has vowed to exact a heavy price from Hezbollah, which has denied responsibility for the attack. Let's bring in Bloomberg senior editor Bill Ferries in Singapore. Bill, this is a depressingly familiar reprisal of violence in the Middle East, but what are the risks now of this conflict getting wider?
Well, we've seen ever since those initial October 7th attacks on Israel by Hamas, some cross-border firings taking place between Israeli forces and Hezbollah based in Lebanon. But this attack that we saw over the weekend that killed 12 young people playing soccer was actually the deadliest attack on civilians in Israel since October 7th. Prime Minister Netanyahu, as you said, promised to exact a heavy price against Hezbollah. So that has really raised fears of a wider conflict taking place here. Yet at the same time, those peace talks between over Gaza have continued. You had Israeli, American, Egyptian, and Qatari negotiators meeting in Rome, trying to discuss, put the final touches on a peace plan that has really been hung up on just a couple key issues for months now. So we'll have to wait and see in the coming days whether they can actually get a breakthrough in those talks that might calm down some of these other fronts in Lebanon and with the Houthi rebels.
And adding to the mix as well, we have Turkey offering its support to Gaza. What are the implications of this?
Yeah, it's not clear how far Turkish President Erdogan is wanting to go here. He suggested that maybe Turkey would try to intervene somehow to help the Palestinians. Turkey has engaged in other conflicts. We just don't know at this point whether this is more of political talk to his base there to get them worked up, or if it's something he's seriously planning. At this point, though, we've seen no indication that Turkey is taking additional steps to get involved.
You mentioned earlier the work that's going towards achieving a ceasefire here, and we heard Benjamin Netanyahu talking about that during his visit to the US. But to what degree was that perhaps a message tailored for a US domestic audience? And is that ceasefire now at serious risk following those events over the weekend?
Well, I think there's things happening on a couple different fronts here. You've seen the attacks against Israel by both Hezbollah in Lebanon and by the Houthi rebels in the Red Sea, and with their drone strike last week against Israel. They have said that they would stop those attacks if there is some sort of a truce between Hamas and Israel, and that's what those peace talks have really focused on. So there was certainly some domestic U.S. component to Netanyahu's talks, but Israel has remained engaged. They've expressed some positive comments about the way these talks are headed. The big holdup continues to be, one of the big holdups continues to be whether a short-term truce will really lead into a longer-term peace. Israel continues to say that its goal is to destroy the Hamas leadership. That hasn't happened at this point, so Israel doesn't want to commit itself to a longer-term peace deal at this point.
All right, Bloomberg senior editor Bill Ferry's in Singapore. Plenty more ahead. This is Bloomberg. Here are some of the top corporate stories we're following. Eisai shares tumbled the most in more than 18 months after European drug regulators rejected an Alzheimer's therapy from the Japanese drug maker Biogen. Jefferies says that's a very big negative surprise since approval was expected. Its analysts say reputational damage from the rejection could still hurt the drug's sales, even if it's approved on appeal. Bloomberg has learned that Prada is renting a 2-floor store at a harbourfront luxury shopping mall in Hong Kong, and that's going to be the company's first major news store in the city in years. Prada shut its flagship location in Causeway Bay in 2020, ending what was then one of the city's most expensive retail leases. At its peak, the brand had 9 outlets in Hong Kong. That's down to 6 today. All right, let's take a look at some of the stocks we're watching. Alibaba shares doing pretty well in Hong Kong. Jeffrey's saying there's more catalysts ahead for the stock, never mind the macro uncertainties. Among them, the company is now charging a 0.6% service fee on both Taobao and Tmall merchants, and that's seen as potentially being positive for revenue. So Alibaba shares there rising by more than 5% at the moment. Got a few electric vehicle themed stocks and battery stocks that we're watching today as well. We've got CATL shares a little bit softer, 2.3% at the moment. They have been off by almost 5% a bit earlier. This is after second quarter sales missed the average analyst estimate. So the maker's sales, that's 4 consecutive quarters now that CATL sales have missed estimates. Still up about 13% this year, and that beats the CSI 300 overall. Seeing a little bit of weakness for Evergrande NEV, creditors there applying for bankruptcy. Plenty more to come. This is Bloomberg. All right, welcome back. China markets just heading out to lunch, and as they do so, we've got the CSI 300 a little bit weaker, 0.4% there. The Shanghai Composite, meanwhile, pretty much flat. And that rather bucks the trend that we're seeing around the region. All the other major markets in the Asia-Pacific's in positive territory, but some softness there in China. Got the offshore yuan there, 725.57. All right, let's take a look at markets elsewhere. Avril's in Singapore keeping an eye on things. Avril.
Yeah, and we're keeping an eye on the BOJ as well as the Fed this week, aren't we, Paul? We're seeing in Japan those expectations. About a third of the respondents in their latest Bloomberg survey expect the base case to be a hike this week, but almost none of them are, excluding the possibility that we actually see the risk of one. It's really uncertain. Even as we approach that 2-day meeting, we've seen yen stocks. They've both been on this roller coaster ride. Treasury Treasuries headed for their third straight month of gains. They're catching a bit of a bid on the 10-year today. Let's bring in our Bloomberg M Life strategist, Mark Cranfield, who's something of a BOJ whisperer. In our past conversations, Mark, you've made it quite clear that I think the BOJ doesn't want to disappoint this time around, but also worth highlighting how this is inherently a cautious central bank, and the data recently on the economy hasn't been great.
Well, they will realise, like everybody else, that the stakes probably have never been higher for a Bank of Japan meeting than this one this week. So we've seen a huge reduction in short positions. You've seen the yen strengthen significantly over the past week. We've seen a lot of discussion about that they need to reduce bond purchases. We've just seen JP Morgan have just put out a report saying they expect a 15 basis points rate hike and large reductions in bond purchases. That's almost becoming a bit of a consensus view. And we haven't seen any major pushback, which is unusual. We did before the previous two Bank of Japan meetings. We saw Japanese media reports trying to dull things down a bit, trying to say, don't get too excited, there's not much going to happen. This time around, we're not seeing that so far. We've only got 2 days to go. So it looks as though people are generally got it right, or the view that the Bank of Japan is going to do something is definitely on the table. How much they're going to do is really a big question for markets.
What are you watching out for in terms of the language and the statement?
So let's say that I would expect that they are going to do a small interest rate hike, either 10 basis points or 15 basis points. But they will need to show that to traders within the context that this is a continuous move away from unconventional policy. So having zero or even negative rates for a very long period of time didn't really do much for the Japanese economy. It was seen by many people as being not a textbook policy, not the kind of thing, and Mr. Ueda seems pretty keen to get rid of it. So he's already moved interest rates once, but there's probably quite a bit to go. Bloomberg Economics think that 0.5% would be something like an equivalent of a neutral rate in Japan, which is quite a bit higher than where we are now. So way to go, and he needs to keep that messaging going. Because what we've seen this year a couple of times already, that when the Bank of Japan don't make the messaging clear, it's the yen that pays the price for it. And when you've had a reasonable rally already in the past week, that means the positioning in the market is more neutral. There's more chance that if the traders don't hear a clear message, they will take it out on the yen.
Yeah, so not only does it cannot afford to not hike, it also needs to signal that it's not just one and done. How else are traders positioning in the markets now?
Also in the bond market, you can see that people have become quite defensive, particularly for the very long end of the curve. There's some kind of expectation in the market that when the Bank of Japan does start to reduce purchases, it'll be much more the 10-year, 20, 30-year sector of the curve, much more so than the short end. So we've seen steepening of the curve. It's probably got a way to go. The Bank of Japan owns more than half of the whole bond market. Central banks typically don't want to own too much of the very long end of the market. That's the most volatile part. They can influence the short end much more, so they feel more comfortable there. So it's all got a bit out of skew. And the Bank of Japan probably wants to rebalance, and by doing that, probably means refocus on shorter maturities. And that means they're going to be buying a lot less, which is always a tricky part of the curve anyway. There's not so much natural interest. So traders will be very aware of that. And they will be them already in preparation. They're beginning to unload some of those long maturities.
And for the Fed, it's unlikely to commit to timing on rate cuts. But what are you looking out for in terms of whether we do see more dovish language on September?
It's a lot will depend on how they signal about the upcoming data, because it's quite an interesting situation. They've got this meeting this week. Before they meet again in September, there will be at least 2 more inflation reports, 2 more unemployment reports, plus PCE data, lots of other things. The picture could change quite quickly. So even though the Federal Reserve might say we've got time on our side, we don't need to rush into anything, already there's some cracks appearing in the employment data. CPI is definitely falling towards their category. The PCE last week again showed it's getting closer to their target range. If we get some misses on the downside, if we get some soft prints, which is possible, and some people are expecting that, by the time they get to September, they could be under pressure, not just to ease, but to ease big, maybe even go for this 50 basis points, which some traders in the market are really betting on.
Then it makes you wonder what the optics are going into the US election in November as well. But I wanted to get your thoughts on the tech earnings this week. How much do you think they're going to be a driver? Of course, they're important, but given all the macro headwinds on the way, how much is that going to be a driver, especially as we wait for NVIDIA?
investors will probably be looking for anything AI related particularly. In general, of course, they'll want to know that tech companies are still making lots of money, they're going in the right direction, but it's the AI story which really came under pressure last week. Probably Microsoft is the key one this week because of their close relationship with ChatGPT. They may give the best insight into how AI is developing, how profitable it is. So that could be the big one this week. All of them are important. But as you say, NVIDIA is not until the end of August. So even if this week goes very smoothly in terms of earnings, people have still got a very unsettling period for the next couple of weeks waiting for the biggest one of all.
I hesitate to ask you about Asia Tech because I know you're more of a macro strategist, but we also have Samsung this week, and there seems to be a sense that there's an additional headwind. Not only do they have that read-through from US tech giants, but geopolitics also could be in the mix for them.
Yeah, not just that, but China growth as well. People are concerned that the Chinese economy is not getting back to the kind of growth numbers that we saw, the expansion that we'd seen pre-pandemic period. So you can see it. It's even in the oil market, people are already marking down the demand for oil this year. So if they're doing that based on China, they're probably going to do something similar for demand based on, you can see Apple's iPhone sales have been slumped outside the top 5 now in China as well. So clearly there's something going on there which is worrying people. That will be part of the picture. And also, as you say, the risks from if any new tariffs are put on somewhere, and it doesn't mean to say we necessarily have to wait for the November elections. It could even happen before that. We've seen some quite aggressive moves from the United States already. If they do it again before November, it will probably hurt the whole tech sector in Asia.
And keep us on our toes. Mark, thank you so much for sharing your ever brilliant insights. Mark Cranfield, our MLive strategist. Back to you, Paul.
All right, thanks, Avril. Let's get to some top global stories we're following. Vice President Kamala Harris has raised $200 million in her first week as 2024 presidential contender, highlighting a surge of enthusiasm among Democrats. Meanwhile, Bloomberg has learned that she's zeroing in on a group of potential running mates. Sources tell us the shortlist includes Arizona Senator Mark Kelly, Pennsylvania Governor Josh Shapiro, and Minnesota Governor Tim Walz. Chinese state media say at least 12 people were killed after a house collapsed in a landslide in Hunan province as heavy rainfall continued over the weekend. The city in the northeast also issued an emergency flood warning, while some 27,000 residents were relocated in Liaoning province. Beijing has allocated an extra $67 million in disaster relief for regions battered by weeks of torrential rain. U.S. Secretary of State Antony Blinken holding quad meetings with the foreign ministers of Japan, Australia and India in Tokyo. The group now in a working lunch this hour, and this is after the U.S. pledged to defend Japan and South Korea as defense ministers from the 3 countries signed a deal formalizing plans for regular military training and defense talks. Our East Asia government editor John Herskovitz joins us now with more. So, John, what are Antony Blinken's objectives with these meetings in Japan?
Well, he's really here to reassure the U.S.'s allies that they're going to stand with them regardless of what happens with the election in November. And with the second purpose is to show the U.S. and its partners are lined up together against what they see as China's assertiveness in the region. So he's trying to first deliver this message with Japan and South Korea. And the Quad meeting, which is going on now, Quad is Japan, Australia, U.S. and India, that is more directed towards China. We're going to get a press conference from this, maybe about an hour or so. We'll find out some of the details of what was discussed. But those are the main things, looking at the main partners in Asia with Japan and South Korea, and also this broader message of the unity that the U.S. is seeking with regards to China.
Well, tell us a bit more about the significance of this defense deal signed over the weekend between South Korea, Japan and the U.S.
Yeah, we've seen a marked change in relations among the 3 since Yoon Suk-yeol became president of South Korea about 2 years ago. Some of the historical differences that drove South Korea and Japan apart have been mended to some extent, and this has led to security cooperation. The U.S. and its 2 key allies are doing things like joint military training, trying to shoot down missiles, hunt for submarines. And this deal locks in, or tries to lock in, some of the gains that have been made so that this trilateral cooperation goes forward. The main thing is they want to all work together when they're looking at threats from the likes of North Korea. If they're all on the same page, looking at the same sheet of material, it helps the security for all three. Now, the worry, of course, is what may happen when, if Donald Trump were to be elected. There were some differences, there were some problems with the bilateral relations and the trilateral relations during his administration. Some of it had to do with the historical animosities that came to the forefront when he was president.
Of course, South Korea also saying that Kim Jong-un might test a nuclear weapon before the US election. Of course, the paradox with nuclear weapons is that you can't really ever deploy them. Under what circumstances might Kim Jong-un be tempted to use one?
Yeah, Bloomberg Economics did an analysis today looking at war scenarios and the cost of the global economy if there was an actual conflict on the peninsula. And one of the things we looked at is the possibility of use of nuclear weapons. And for Kim, he's seen by analysts and hopefully governments as a rational actor. And nuclear weapons would be a last resort. It's the end of his regime. Perhaps his life is threatened, his family, his leadership of the country is in peril, and this could be considered a time when he could use them. And every year that he's been in power, he's been adding to his stockpile of fissile material, improving his warheads and the way to deliver them by modernizing his missile arsenal. So he's getting more effective means of delivering a credible nuclear strike, which is a worry. But the risk of a conflict are exceptionally low, and this would be in in the end of regime type of scenario that he would actually use them.
All right, East Asia Government Editor John Herskovitz there. Still to come, Angel One Wealth says they're not ruling out a possibility or a possible market correction in India as stocks reach peak levels. We'll have more on their outlook next. This is Bloomberg. Welcome back to Bloomberg Markets Asia. You're watching the India Focus, and here's a look at India markets just ahead of the open. Looks like it's going to be another positive day. Got the Sensex better by 0.4%. So for more on markets, let's bring in our next guest, who believes some correction cannot be ruled out. Ankita Pathak is portfolio manager and multi-asset strategist with Angel One Wealth, a platform for India's emerging and ultra high net worth individuals. Ankita, thanks so much for joining us today, and it looks like we're setting up for another positive day on Indian markets. I mean, it's a very constructive story to be told here, but is there a risk of correction? Where would you place that risk?
Thank you. Thanks for having me again. Always a pleasure. Well, yes, we are off to a good start, but the risk for correction lies in overvaluation in certain segments of the markets, I would say. So I'm not overall negative on the markets, but I do notice that the earning growth for FY25 is likely to be lower than FY24, which makes certain sectors of the markets pretty overvalued. So I think there is still opportunity in large cap in the markets. But other sectors, and especially mid and small caps, the allocation can be moved away towards the large cap now.
So when you're looking at sectors that might be showing signs of overheating, is there anything in particular that flashes red to you?
Maybe capital goods, PSU banks. That's where the valuations have gone up quite a lot, and the earnings ahead does not look that promising. So.
Can you tell us a little bit about your outlook for India's banks as well? Because they've been issuing quite a lot of unsecured loans. We also have the RBI's next move likely to be down. Do you see any risks here for India's big banks?
There is a risk for banks because credit growth in the economy is significantly higher than the deposit growth. And while, credit can mobilize some of the deposits, the core essence of banking lies in having a deposit growth. So I think that way we do see some risk in the banking sector. But having said that, the net NPAs of India are still very much under control. So there are certain private banks that we think still has more space for performing in the markets, while from a bottom-up stock picking approach, we'd rather avoid some other names.
So we've had a good chunk of earnings reported so far. I'm just wondering if you can give us your report card on what we've seen and what you're expecting in the second half.
Sure. So we've seen earnings come in slightly slower growth rates that we are seeing so far compared to the same quarter last year. So FY24, on an overall Nifty basis, we clocked an earnings of about 25%. This year, we are averaging close to 15%. So there is some earnings slowdown that we are seeing so far. And I think this will continue for the rest of the quarter and also for the year. And therefore, my concern for certain segments of the market not doing well, and therefore asking for a shift towards large cap for investors at this point.
So in terms of advice that you're giving to your clients, do you think maybe some more allocation should be given to debt, consider some of these elevated valuations we're seeing in stocks?
Some more allocation to debt, yes. Within equity, look to large caps. Within debt, long duration bonds will make more sense because we expect a rate cut cycle to play in as and when Fed starts cutting rate. Within commodities, we think the precious metals still have more space. So gold has more run up possible as the dollar weakens globally. Also, silver has not run up as much as gold has done already. So maybe some more allocation to precious metals could also help hedge the portfolio as equities become slightly more overvalued for India.
Ankita, before we let you go, I just want to get your view on RBI policy, when you expect to see some easing and what potential impact you might see on the rupee. Do you think there's some further room for weakness there?
All right. So I think RBI monetary policy on rates is significantly different on rupee at this point. So on rates, we expect RBI to follow the Fed, which is September policies where we're expecting Fed rate cuts to happen. If India's inflation is in control by then, we think RBI is likely to deliver rate cut as well. On rupee, I think RBI has taken a stance where we expect rupee to be stable, range bound as a currency. We've been having, intermittent flows come in, which are getting sterilized by the Reserve Bank of India, making the forex reserve at a whopping USD $670 billion. So I believe using its own forex instruments, RBI is likely to help rupee be a little more range bound, and I don't think rate cut would lead into a sharp depreciation of INR as and when this comes into play in the later half of this year.
All right, Ankita Pathak of Angel One Wealth, thank you so much for joining us. And let's take a look at how we're tracking on the Indian markets. It does look like we are setting up for a risk-on day. And we were talking there with Ankita about the banks. ICICI Bank performing pretty well. It's up more than 2% at the moment. We did see profits beating average analyst estimates. Loan growth very strong as well. All right, we do have plenty more to come. This is Bloomberg. Welcome back. Pakistan's central bank makes its policy decision later today. Bloomberg Economics expecting a 100 basis point rate cut to spur growth. So to discuss what to expect, let's bring in our Pakistan Bureau Chief, Fasi Mangi. Fasi, so that would take the rate down to 19.5% if it happens. What factors is the central bank balancing here?
Yes, thank you for having me, Paul. So basically, what they are looking at precisely is that inflation has dropped, and it is expected to drop further to 10.6%. Just to recap, in the last policy meeting, Pakistan cut its interest rate for the first time in 4 years from a record high. And it started a monetary easing cycle that is expected to continue throughout gradually. And it's expected that the interest rate will reach around 16% according to a Bloomberg survey. So yes, in that, as Bloomberg Economics also predicts. I think the overall prediction is for a cut, with 100 basis points being the median estimate. The main consideration is inflation right now, and since it's on a declining trend, that is the view. The other side is a few people are a bit cautious as well. Pakistan just passed a budget that was key for it to get into an IMF new program. And in that budget, we've seen that taxes are increasing by a record 40%. And because of that, there may be some inflationary impacts, and that has gotten a few people to be a bit cautious. But yes, the overall trend is monetary easing gradually to 16% by the end of this fiscal year.
Well, we've heard also from the finance minister that Pakistan's looking for help from China to reprofile its debt obligations. What do we know about this?
Yes, so Pakistan has huge debt payments. It's had a few challenging years with debt repayments that have been a big focus. So during the Chinese Belt and Road Initiative, Pakistan has been a flagship destination, and in that we've seen that a lot of the large chunk of the money went into power plants, and we're seeing that there is some distress or some stress piling up for Pakistan in terms of repayments to them. So they've taken the first step of going to China, speaking to them and asking them to extend the debt payment time for those power plants. There are 9 power plants to be precise. Talks are in early stages, but yes, they talk about there being some debt stress for Pakistan that came from the Belt and Road that has turned into a reality now.
All right, Pakistan Bureau Chief Fasi Mangi there. Well, let's take a look at some of the assets that are moving on markets at the moment. We are taking a look at crypto stocks, Bitcoin as well, because we've had some remarks from former President Donald Trump talking about cryptocurrency. He's been saying, well, make Bitcoin great again, to rapturous applause at one of his rallies. He says he would fire Gary Gensler, the Securities and Exchange Commission chair, replace him with regulators who love the digital asset industry should he win power in November. So Bitcoin gaining there by 2%. That is it from Bloomberg Markets Asia, Horizons Middle East and Africa. Up next, this is Bloomberg.